The main point that I'm making in the piece is this, that we are all sort of conditioned to thinking that financial markets reflect the underlying economic reality. What I'm trying to sort of say in this piece today is that now the tail wags the dog, which is that the size of global financial markets is 360% of global GDP. And if you even go back to the Lehman episode, I can argue that what was a garden variety housing crisis really became something much bigger once the market started to melt down. So the entire point I'm trying to make here is that today the size of global markets as a share of global GDP is even larger. And rather than thinking that markets are reflecting economic reality, we have to take into account that financial markets are in fact driving economic activity. And if something happens to the financial markets, that blowback will be quite severe for the US and the global economy.
So is it a recessionary call? And if so, are you looking for a severe recession, and when?
No, I mean, the idea basically is to say that, like, every time the Fed starts raising interest rates, typically after about 2 or 3 years, you need to be cautious. Even in 2004, when the Fed started raising interest rates, some people sort of, sounded cautious, but it takes a while for this to start to play out. In very technical terms, I think that once we get above the neutral rate on the Fed funds rate, which is about 100 basis points possibly in today's day and age, in this new environment, the risks certainly begin to increase. Now, the thing is that no economist thinks that we're going to have a recession before, let's say, the end of 2020. I think the risks are going up over time, and by next year, when the real Fed funds rate is going to be well above 100 basis points, if the Fed continues on the current trajectory, I think the risks increase materially of something going wrong. And the blowback will come from the financial markets, not the other way around, that something begins to go wrong in the economy, and that then begins to affect the financial markets. I think that it could work the other way around, and it possibly did even in 2008.